HSBC today announced a 17% fall in annual pre-tax profits, with a particularly weak fourth quarter, sending its shares down more than 5%. It's also been embroiled in the last couple of weeks in a growing tax scandal involving its Swiss private bank, which today led to its chief executive, Stuart Gulliver, having to answer awkward questions about his own financial arrangements. Joining me to discuss all of this is the FT's financial editor, Patrick Jenkins. So Patrick, let's start with the performance. What do you think? Is HSBC suddenly become a bad bank overnight, or is it just not doing quite as well as people expected because it's got some regulatory headwinds and had a bit of a tricky fourth quarter?
Well, it certainly had a tricky fourth quarter. Across all of its businesses virtually, performance was lackluster, below expectations, and also in terms of the forward-looking guidance, the thing that analysts and investors really look at, there was disappointment as well. The bank ditched its return on equity target, which had been up to 15%, 12 to 15%, now saying just that it wants to do more than 10%. And yes, it looks far less like a good bank than it used to.
Still doing a lot better than the other British banks.
It certainly is, yeah.
And a lot of other banks, perhaps not as well as some of the big American banks.
No, but it's ahead of its peer group. If you think of Citigroup, if you think of Standard Chartered, which is going through its own really deep-seated malaise at the moment. If you think of all the UK based big global banks as well, the likes of Barclays in particular, Royal Bank of Scotland, way better than that. Even after the fourth quarter performance, which was so bad at HSBC, still had a return on equity of more than 7%.
Yeah, but that's not good enough because their cost of equity is estimated to be at least 10%. So they've still got a long way to go and perhaps some more restructuring to see there. But just moving on to the tax scandal that, as I said, has now caught up with Stuart Gulliver himself with his own tax affairs. He's been, in the past paying some of his bonuses into a Panamanian company that held an account in HSBC's own Swiss private bank. It's all a bit secretive and murky. What's going on there?
Well, it's all perfectly legal, or so we're assured, but it doesn't look great, it has to be said. And of course, in a nightmare for the chief executive, it all links back to this Swiss private banking row, which has dominated the news for the past couple of weeks. I think in terms of, as long as nothing more emerges about his own tax details, as I say, it shouldn't be a personal problem.
The bank put up a pretty robust defence of his own personal tax affairs, with the chairman of the bank, Douglas Flint, saying that Stuart had the full support of the board and he'd been fully transparent and all of his tax affairs were perfectly legal, fully compliant and, totally regular.
And he has been, the thing to say on this is that he's not like the chief executive of Lloyd's or something, a UK-focused bank. He has had a career that's taken him abroad. He therefore needed to have an international tax planning arrangement, arguably, for some of his
he's a non-dom, which is controversial in some quarters in this country, but not illegal, as you said. Now, I mean, just to ask you on him in particular and how important he is, because people do think that he's one of the most talented bankers in the UK. He does still clearly have challenges ahead of him. And there was some sense today in some of the calls that he was getting a bit weary with all this now, very personal attacks on him and his personal affairs, and he's a very private man.
It's going to get worse from here, though, because Stuart Gulliver is going to be before one of the parliamentary committees, the Public Accounts Committee, within the coming days. He's going to get pretty lambasted there, I suspect, both over his own affairs and the fact that he had such complex tax management through the Swiss subsidiary of HSBC does suggest that when he was in a pretty senior management position back in the late 2000s, he clearly understood Swiss tax planning and should have been able to ask tough questions of the people on the ground. All that said, what investors care about is the future. Now, as I said, Stuart Gulliver downplayed expectations, but frankly, as long as the current management manages to survive this crisis in the short term, investors are going to really care about whether they can continue to deliver in the future. Political rows aside, what they care about is performance.
Okay, thanks very much, Patrick.